Pros. All right, good morning, everybody. Welcome to our morning market update for Tuesday, February the 13th of 2018. This is George Pappas of TRADEPRO Academy. Equity runs overnight are coming to a very quick conclusion, if you will. All right, so we had a little bit of a rebound trade yesterday. It was quite a strong bullish run. I have to admit that to you. I wasn't expecting that. In the morning session, we had a sell-off that occurred. Stocks dumped quite a heavy amount and then pumped back up through that resistance and took out some buy stops. We needed that. That was a healthy. If it is going to be a bearish trend, I almost spilled my coffee all over my lap. That would have been funny. If it is going to be a healthy trend in the stock market, you're going to need to have a double-sided market. That's been my problem with equities the last couple of years. Not that they've gone up so much. A bull market is a type of trend and it moves, and that's great. But it's just that there was a lack of a downside. We're finally starting to see the downside, and in this downside, we're getting a double-sided market. That's what you expect. Look at the trend, though. You're getting lower lows and lower highs on a larger time frame. Therefore, you still have to play the short side. I think there's a lot more to come on the sell-off. We ain't done yet. All right, so overnight, Japan's down 0.7%. Hong Kong's up 1.3%. China's up 1%. India's up 0.9%. And in Europe here at midday, London was up 0.1 of a percentage point, and then that's where all the gains stopped. All right, so strong Asian session, but now you're going to start to see some negative numbers. Paris down 0.5%. Frankfurt down 0.5% as well. Dow Jones here in the United States futures open down 0.8%, now down more, almost a percentage point. S&P is down 0.7%. NASDAQ is down 0.7%. And in a time where you just a month ago, to hear something like the market's down almost 1%, it would sound absurd. Today, now it's the norm. In 2009, I remember a similar time. Actually, it was in 2008, before the crash. You saw a similar shift start to happen. On the first down wave, it went up, went down. It was very volatile as bulls just couldn't believe that it was going to pull back on a deeper trend scale. And it did, all right? And it did. And what's happening right now is the market is pausing and giving some time for traders to buy this dip yet again, because we've been conditioned to buy the dip for the last 6 years. It's worked. And in order for us to continue lower, we have to stop. Think about institutional traders selling a whole bunch of quantity, and they're selling. Nobody wants to buy it anymore. They scare the crap out of the market. So they hold back on the selling. They say, like, we're not going to sell. Let's just be patient. Let some buyers show up. Some retail traders come up, and what are they doing? They're buying. Who starts selling it to them? Institutional, slowly. And then as you accumulate everybody that's long, all the retail crowd is bought. There's nobody left to buy anymore. There's a whole bunch of institutional volume waiting just to be dumped on the market. What do you think the next move is? Down. We take out every retail trader, stop losses, institutional, unleashes another round of selling. Be careful. That can happen as early as today. In our Sunday webcast, in our webinar, we said Monday could be a bounce back day along with Tuesday. And then Wednesday, we take this thing through. Hell, that could even happen even earlier today. We could just push through these lows and sell off in very dramatic fashion. Always watch the market for hints of where it's going by two factors. Number one, how fast is price moving? And number two, how's the volume looking? Right now, in the last couple hours, especially since yesterday, yes, after the European market closed yesterday, we got a pretty steep rally. However, that rally happened slower and on lower volume. Still, until this day, until right now, the bears come out stronger and on heavier volume. You got to give them credit. Be very careful. This isn't as peachy and rosy as it once looked just 3 weeks ago. Okay, I'm gotta stop doing that. I'm knocking over something here. All right, the EIA, or the IEA, International Energy Agency, released their oil market report yesterday. They said OPEC and its allies have almost solved the problem of large supplies in the oil market. However, their effort is off-put by the fact that the U.S. is increasing their shale production. U.S. shale, by the way, is growing at the faster pace than it did in the boom of the oil industry in 2011 2014. All right, that's when we had our previous swing high. It's growing faster than that time period. The difference now is the price of oil is 40% lower. So why is the United States boosting its shale production? Because it wants to take advantage of a lower output from OPEC. Keep an eye out on oil. I think at some point we're going to abandon this whole production cut agreement throughout this year and go back to just an open market. And then it's going to be oversupplied. We're going to have a huge short that's going to unwind in oil. Stay tuned for that. I'll keep you guys posted. Gold is up 0.4%. I can't talk today. Bitcoin's down 4% to 8,500. All right, we don't have any huge news today. Fed's Messer spoke at 8 a.m. I'll put our TradePro subscribers in the room. I'll give you guys an update afterwards on what she said. Today, top Wall Street executives are meeting in something called the 19th Credit Suisse Annual Financial Services Conference, and that happens today. So we're going to hear some public speeches made in this conference from Goldman Sachs CEO Lloyd Blankfein, Wells Fargo, symbol WFC, their CEO Tim Sloan. We're going to hear from Bank of America's CEO Brian Moynihan, Citigroup CEO of Latin America Jane Fraser, and all these investors at the conference are wondering how 2018 is shaping up. They want some kind of forecast from these bank CEOs, like they know anything. These bank CEOs are freaking clueless when it comes time to the markets. All they know is what their business is doing, and their business is based on interest rates. So forget about these CEOs. Look at the Fed. That's much more important. CEOs don't know much. Anyways, I'm not going into that rant. I don't have time to get in that rant. Remind me about it someday. I'll get into it. Oh, I could get into it. All right. By the way, I'm a CEO of my company. Not on that scale, but I have some experience with CEOing. All right. UK inflation numbers came out today, and it's the highest level in nearly 6 years in January. This is the highest January inflation number in 6 years. This is interesting because the UK, the Bank of England, has been talking about inflation not being that great. The United States has said we've had trouble seeing higher inflation numbers, but recently inflation's picking up, not just in the UK, but globally. The US had a little bit of a higher inflation number as well. So what does that mean? It means the Fed may have some justification for raising rates. But hold on, because this inflation number is out of the UK. So that's actually the Bank of England who's got a little bit of more opportunity to raise rates. This is a really good stage setter for tomorrow morning at 8:30. We see the United States inflation data, and if inflation has ticked up, investors and traders are going to automatically assume that means a little bit more hawkish Fed, which means they're going to raise rates faster over a shorter period of time. That's going to have an effect on a higher US dollar. All right, because I won't be able to talk to you about this in time tomorrow. So watch the inflation number. If it comes out higher, US dollar should rally. Okay, gold prices will probably drop. Equities will drop as well as a result, and so will oil. But mainly what you're looking for is the US dollar. On these inflation trades, they impact the currency market a little bit more than they do equities. All right, that's what we're looking for tomorrow. We got inflation numbers set for the United States. UK comes out one of the strongest numbers in a long time. UK is concerned. They want prices to get back down to about the 2% range. They think overheating inflation could be a problem, and I agree. That's what happens when you throw trillions of dollars into your in your economy and put that on your balance sheet at the central bank. I mean, that's what happens when you create all this free money and give it out. Holy crap, prices go up. Who would have known? More money, all right, same demand for it means what? It's going to inflate. They're just inflating that bubble. All right, that's all I got for you guys. You guys take care, trade careful. This morning we're going to be selling rallies and take advantage of this downside trade. I just peeked over 26.42 or so. So we're going to be selling rallies this morning until it's a wrong time to do it, and then we're going to start to buy the dips if there is an opportunity to convert over to the upside. You got to trade momentum. Somebody in our trading room the other day said, hey, this guy, I want to know what analysts think and fundamental research suggests about the future. And I told them straight up, nobody knows. I can't even tell you where the market's going to be in 5 minutes, let alone where it's going to be in 5 years. Nobody knows. The further out you try to guess, the more likely you are to be wrong. The more it becomes an arbitrary guess. All right, if you took a curve and you stretched it out, the further out you're trying to forecast, the closer your forecast levels are going to get to the levels of a monkey. A monkey in a cage just said, forecast, just clicks random things on a computer. That's what it would equal, except that monkey doesn't have a CFA. Ooh, it's still just doing the same thing. Nobody knows the future is what I'm trying to say. Don't try to predict the future. Trade the present. You don't have the past. The past is gone. The future may never happen. Right now, in this single moment, is all you got. Take advantage of it. Forget everything else. You guys take care. Good luck. Be careful. Trade what you see, not what you want to see. All the best. Don't be right. Be profitable. That's all that matters. I'll see you guys tomorrow morning. I'll be doing it from my home office. I'm flying home. I'm really excited. LA is great. California weather is awesome, but man, there's nothing like sleeping at home in your own bed. I can't wait. I'll see you guys tomorrow at 9 a.m. All right, take care. All the best. Goodbye. See you then. Trade careful.